Well, hello. Thank you so much for joining me for another weekly wrap. We'll get into it in just a second here. It was another busy week. You've probably heard the adage before is, well, how low can it go? Well, now we're in this of how high can it fly, right? It just keeps going and meeting these all-time highs. How do we trade that? We have to have some things in place on our charts as to what we are watching for, right? So that's what we're gonna get into today. And I also am going to mention here in a little bit why I don't typically trade the indexes at the end of the day, particularly on Fridays, and I'll explain that here in a little bit for you. But let's get into what did happen this last week. The S&P, like I said, closed over 5,800 for the first time. It was just incredible. It was the 45th time in 2024 that it did have a record. So just amazing momentum there. The Dow closed up 1% for the week. I think the small cap, the Russell, also closed up like 2% for the week. So, and that really is good news, because then you see that kind of the trickle down of not just the big guys, but some of the smaller ones are also feeling some of the momentum to the upside. So to me, that is very positive news. We had a couple inflation reports came out this last week. We had the CPI and also the PPI, really excellent reports on both front. Now on Thursday, the CPI came out on Thursday. That was a little less than the expectation, I believe, is what I read. However, Friday with the PPI, that certainly took care of that and had the momentum again back up to the upside. So just a little hesitation and then all on board again as far as the bullish momentum. So very exciting there. We did have some earnings came out this last week. We had actually JP Morgan and Wells Fargo, if you can believe it, they beat expectations. So it's kind of like the banks, regardless of the fact that we did have that 50 basis point rate cut earlier in September, mid-September. Now the banks, they're still going strong. So we'll see if that carries through, because next week we have Bank of America and Citi are both reporting their earnings next week. Now Boeing did not have a very good, they had negative guidance came out this last week, and they are talking about laying off about 17,000 workers. So, you know, you don't know which sector is going to be hit, but we knew that Boeing was, there's been just too much bad news for them to overcome. So hopefully they can regroup, get things together, and come out on top again. So we'll see. But let's take a look at our charts. In front of you here, you have the S&P. This is the daily chart. I believe I shared this with you over the last, I do share this one with you if I do recall. But what are we looking at here? I have my trend line. Two trend lines, actually, kind of a large wedge pattern, isn't it? And that's something else you should be aware of. We had on the lower trend line, we had a touch here. We had a definite touch here and really close there, so I consider those valid. And we'll see if the momentum does keep carrying to the upside, as we had a trend here and we had a touch here, and it did break above that on Friday. So we'll see if, of course, if that continues, or we come back down and retest our trend line below with that small wedge and see if we have some consolidation within that. With the election coming up, and like I said, we are going into a real strong earnings season. So we'll see if, you know, which way that goes. So it's very interesting to me to just kind of watch how this is going to play out. So now let's drill down a little bit on the S&P. Here we have the S&P on this over here. This is the hourly chart, and then we have the 15-minute chart. A couple price action here that I wanted to show you, or for you to be aware of. On Friday, like I said, we did have inflation reports come out on Friday, but this pattern here is very interesting. This kind of took place right before our opening. We had a dip down here. We had some stabilization here, as you can look left, and you could see that there was a lot of support here waiting, some buyers waiting to see what kind of inflation report we were going to have. We had an increase, and then we had it, so it's a kind of a drop, and then we had a base, and we would rally, and then we had another base, and we had a strong rally up when that report came out. So this is an interesting pattern here. We had this little, you know, come up, and that was during the time that the report was issued on Friday, and then the momentum took hold. Now, you'll often see, and you've probably heard, where the first large extended range candle is more of the commercial traders, and then it was followed by you and I, the retail traders, that kind of hop on here, which is certainly indicated here in this pattern. And then we had some consolidation at the end of the day on Friday. But let's get over to the 15-minute chart. A couple things I want to point out to you. I have a video that I made about what to do in the first thing in the morning, and that is the 15-minute open, and that will be linked to you later on in this video. But here we have the first 15-minute candle marked off, and that is 8:30. I'm in Central Time, so that's an 8:30 to 8:45 candle. New York time, of course, 9:30 to 9:45. And look at that momentum. Now, that certainly what I did. I jumped in here. We had that close above, and then we had a little test here, but the test couldn't even meet that second candle here. So I jumped on board here and rode it up. I think I got out right below 5,600 or 5860. It's even hard to even say 5,800. 5860. I was very, very comfortable and very, very pleased with that morning's move. And then I got out, and a couple of reasons. The RSI was certainly, as you can see here, a little divergence, and it was starting finally to retrace or kind of lose the momentum to the upside. So that's another reason I got out. Also, if you're looking at the S&P, you also want to keep an eye on the NASDAQ, and always have both of those open. Now, the NASDAQ on Friday, I think it had like an overall 8-point positive move or something by the end of the day. So it just did not have the strength, and I think that was probably mostly because of Tesla. They lost nearly 9% on Friday. So that certainly had that strong influence on the NASDAQ overall. So that's where, and again, the S&P then again was strong to begin with and followed the Dow, but then the NASDAQ, it kind of brought that weakness into it. But if you are trading later on in the day, you can still put some patterns on your charts. And look at this trend line here. Really strong trend line. I mean, it was really, you put those on, and then you see that it dipped down below it. It came up and retested if you went to a 5-minute, and then it dropped down. This is at the end of the day, and it kept falling. Now, this is what I wanted you to be aware of. At about 2:50 p.m., oftentimes the market on close report is released. Again, at 2:50 p.m., this usually takes place on Fridays, particularly strong during triple witching, quadruple witching. Those are the option expiry times, and so you will see a large movement on the end of the day, like I said, usually on Fridays or those particular days. And this Friday, that did indeed happen, and the number of the amount of imbalance was not that great, so it did dip down. But and if you have a strong momentum to the upside during the day, oftentimes then those long carriers will then sell their positions. So I stay away at the end of the day. Also, I have learned the hard way, which probably some of you have as well. You have a really good at the beginning of the day. You're in the flow, and you're earning some money and such, and that's what we're here for. And then you give it back at the end of the day. Well, I certainly don't do that any longer. If I have a good morning, I might say, okay, I'm willing to risk this much. If I saw a pattern such as this, that I would go short on, but otherwise, no, thank you. One last thing I wanted to show you. And this is on let's see, this is the Dow, and this is on a daily chart on the Dow. Now the Dow, like I said, this is also meeting its all-time highs, and I wanted to show you this Fibonacci that I have on the daily candle from Friday on the Dow. And the 0.618, that's considered the golden ratio of a Fibonacci retracement. So I'll be watching on Monday and into next week how much of a retracement, if we do, it will bring down to. And with such strong momentum to the upside lately, and we have more earnings coming out this next week, we'll see if it can break that 0.618 level and can continue to the upside and surpass that all-time high once again, or if it will retrace even farther and dip down. So that's what I'm watching for here. And now this is the 1.618 is an extension line. So if it goes up above this Fibonacci, and let's watch to see how far it'll go, because that's what's difficult, like I said. Where's your resistance level once we're at those all-time highs? Okay, so next week we have, like I said, the retail sales, consumer spending, industrial production. So it's another busy week, like I said. So take good care, trade with traction, not distraction. And like I said, please comment, subscribe. Truly appreciate all of the comments that I've received from you. Thank you so much.